Hello, I'm Jen Lee with Jen Lee Law, and today I'm talking to Maureen Toretto with Loan Depot, and we're going to talk about debt, credit, and mortgages, all kinds of fun stuff. So Maureen, the first question I get from almost everyone who comes in my office is clients think they can't get a mortgage for like 10 years if they file for bankruptcy, because a lot of times we're talking about bankruptcy. So is that true? Can they never get a house for 10 years?
No, it's not true. And it depends what kind of loan you're trying to get. So,
Okay.
Number one, if you're a veteran, you can get a loan after 2 years.
Okay.
After just 2 years. If you are using an FHA product, which is a government loan, Federal Housing Administration, you can also get a loan after 2 years of a bankruptcy and 1 year of a Chapter 13. So part of it depends on what kind of bankruptcy did they have.
Okay.
Did they have a Chapter 7? Did they have a Chapter 13? Those are the two most common that we see. But if you're doing Fannie Mae, it is 4 years.
Okay. But it's not 10 years.
But it's not 10 years,
Okay.
not even close. Not
So,
even close to 10 years.
Go back to that for a second. So you said if someone's in a Chapter 13,
Yes.
which is a repayment plan, usually 3 to 5 years, a Chapter 13, they can get a mortgage while they're in bankruptcy?
So there's two parts to that, which I wanted to ask you about. So the first part is if you've finished your Chapter 13, if it's been discharged,
Okay.
it'll be 1 year from that discharge date. But they can apply through the courts
Yes.
during bankruptcy.
Yes.
So I wanted to ask you, how often do you see that? Because I've not, in my 20 years of doing this, not had one client do it.
Okay.
So I've never seen it done. But
So I
how does
actually
that
have
work?
several of these right now where clients are coming back in, they're in the middle, they're 2 to 3 years in,
Yeah.
and they're saying, we're looking at getting a loan. They sold their house as part of the bankruptcy, and now they're looking at it. And so they came into me with their lenders, and it's interesting so far. I have not had one approved this year. I've had one approved last year.
Okay.
But the one this year that I'm working on right now, we're waiting for the lender now wants a letter explaining the details of why they're in bankruptcy.
Okay.
So that's where we're at right now, which is
I
a
think
legitimate reason. Yeah.
The norm. They
Yeah.
want to make sure they're not going
Yeah.
to go into default again.
But it's actually not as unusual as I think people think it is. So.
And how long is that process?
So the trustee will approve in 3 to 5 days.
Okay.
So if
That's not bad.
No, they have a packet. They have it's all automated. They have a nice packet that they send out and say, okay, give us your budget, give us your loan documents. They want to make sure that you're not getting into some kind of predatory loan, 20% interest on a mortgage or something like that.
Right.
And then it's 3 to 5 days for approval on it.
Okay. And how long does it take to get that court date?
So there's no court.
Oh,
The trustee can approve it
just the
without
trustee.
court. In
Fantastic.
Oakland and Northern District, it's
So
just
it's
the
fairly
trustee.
quick.
Yes.
All right. I wonder why I haven't had anybody try
I think
that
a lot
yet.
of people don't know about it.
Okay.
I think a lot of attorneys don't tell people. I think a lot of people think that they think they have to wait
can't.
10 years.
Right. They have to wait
And
10
so
years.
I've been bringing it up to my clients that the ones that sold earlier in the bankruptcy that, now you may qualify for a mortgage. So you should check into that.
Right. Now let's go one step further. If you're doing so in the area that we're at,
Yeah.
there are a lot of jumbo loans.
Yes.
So the rules are totally different. So
Okay.
if you're getting a jumbo loan, most investors, because it's all about the investors, most investors want 8 years
Okay.
from the bankruptcy debt
Okay.
or bankruptcy discharge date, no matter what type it was.
Okay.
Some of them will take 7 years, just a couple of them, because I just recently had this kind of a case, and it ruled a lot of people out. It
Okay.
rules a lot of loans out for the client. So
Yeah.
definitely do your due diligence with your lender and make sure you're upfront. Make sure you give them all the documentation, the bankruptcy papers, so that we can check and see what that best
you
avenue
qualify
is going
for.
to be, what you qualify for, how many options do you have for a jumbo loan, and what do those rates and payment look like.
Okay.
So that's the big part of that.
And
if you're Fannie Freddie, it's not as big a deal.
What qualifies as a jumbo loan? Because a lot of people don't know what jumbo means.
So jumbo loan in our county, we're in Alameda County, anything above $679,650.
Okay.
So if the loan amount exceeds that number, it's a jumbo loan.
Okay.
So if you're buying a $1.2 million house and you're putting $200,000 down, you're going to be in a jumbo loan.
Okay.
Right.
That makes sense. But there's still options in the county for.
Definite options,
Yeah.
definite investor options as well. But if you're in that situation, you want to be really diligent about getting that taken care of and looked at ahead of time before you find the house that you love.
Right. Yeah. No, I do tell my clients before you even go house hunting that you need to talk to a good mortgage person to figure out what you qualify for and make sure that when they run your credit, I do a lot of rebuilding credit with people, making sure that they've actually done some rebuilding, because 1 or 2 years after bankruptcy, you may qualify, but you may not have the credit score that they need. So
And they're looking not only for the credit score, they're looking to see that you've reestablished that credit.
Yep.
How do you pay your bills now? Okay, you went through this, you've gotten through it, and that's okay. Things happen, life happens.
Right.
But what have you done since then to reestablish, and how are you making your payments and paying your bills?
Right.
Yeah. It's your credit characteristics, your credit worthiness, they call it.
So that takes us to our next question. What kind of credit score is needed for a mortgage these days? What scores do you look at?
So it depends on what type of loan you're getting.
Okay.
So we'll start with VA again, just because that's the easiest one.
Yeah.
So 600, even
Okay.
a 580 possibly, depending on what the rest of the picture looks like, right? So for a veteran, you don't have to have a 700 score to get the best rate, to get the best program, and to do 100% financing.
Right.
So again, in our county, if you're a veteran, you can do 100% financing at $679,650.
Okay.
If it's exceeding that, you do have to put a little bit down, and there's a calculation that we use for that.
Okay.
So that's that credit score. FHA, we want to see 620, 640.
Okay.
Again, you're going to get a really great rate for that. You don't have to have an 800 credit score. So that, again,
That's
up to
good.
that 679,
Yeah.
650 loan limit.
Okay.
Yeah, so a great product, and it's also a low down payment, 3.5% down. So if that's something that you need, you can do that.
Okay.
Now, when we start getting into conventional loans,
Mm-hmm.
that's where it starts to change, because if you're not putting very much down, you're going to have mortgage insurance.
Right.
And some mortgage insurance companies are not going to accept a 640 FICO score,
Right.
or even a 660 FICO score. So in that case, you're looking at 680 and above.
Okay.
Would be best for that type of situation if you're doing 5% down or
Okay.
10% down.
But that's still different than everyone thinks they have to have like a 780 credit score
Right.
in order
No,
to qualify
no.
for a mortgage or something ridiculous like
Yeah,
that.
you
So
absolutely
you're in the
don't.
600s for all those programs,
600s
basically.
for all those programs. When you
Okay.
start getting into jumbo loans, again, we're getting above that 679,
Yep.
650, and we're buying a $1.2 million house, then you better have a score of 700 or higher.
Right.
Because the detriment to you is
The risk is higher, yeah.
The risk is higher, but also you're going to have a higher rate,
Right.
which in turn is going to give you a higher payment.
Right.
So the better your FICO score, the lower your rate, the better your payment.
Okay.
So those all go together.
Interesting.
Yeah. So it just depends on your situation. It's like I love what I do because it's a puzzle.
Yeah, right.
Every situation is different. Every family is different. Every loan is different. So you get to put together the right one for the family.